All right, what is up, YouTube? Excuse for the fan noise if you guys are hearing it. My laptop is sort of getting hot there. So, definitely want to make this video to show you guys exactly how competition in different companies can affect share price. So, we can always look at, Snapchat and Facebook. As we know, Facebook is definitely trying to take out Snapchat's definitely, copying some of the Snapchat's features. And as we see, that has had I would say a toll on the share price. And let's just definitely take a look at that. Snapchat is now at $15 and definitely hitting even lower. Probably going to hit 14 when we may even see 10. Remember, there's a lockup period for those associates or those employees that were paid in Snap shares instead of paid in monetary value. So be looking for those guys to sell, or those guys and girls to sell, once they get the opportunity, because as you see, the share price has done nothing but depreciate since the IPO. We were able to IPO at $17. It was really hot. Then we opened up, I think, around 24, and it spiked to 29. And as you see there, it never reached that high once again. And once we broke that $20 level, that's typically where we went even lower, and we start to try to fill the gaps. We tried to fill the gaps right here, but it just wasn't enough. And Snapchat definitely went lower, and it looks like we're gonna go ahead and reach a new all-time low for the stock, which will anywhere below this 1512 number. So the new one is Apron. I know this is one. This is food delivery. I think they deliver you, fresh pasta noodles. I think they deliver you noodles and whatever ingredients to make you, a quick meal. And we see that Amazon is definitely touching in on their space. So Amazon was chilling, right? Amazon is now up, right? $1,000 was Amazon high. We see it hit 1,017. Excuse me, we see it hit 1,017 and come right back down since the market, falling down, tech stocks falling down for the temporary period. Remember, I said that fall was going to be temporary, but now we see stocks, recover, and we're just about $10 away from an all-time high in Amazon. But we did see the small dip there, and those two small dips here, and now the stock is definitely recovering back up. So there is no, coincidence that Amazon is up while Blue Apron is down. Blue Apron did IPO at $9, and IPO at $9 and did hit or IPO to 10 or 9, whatever the price it was. But we see a high of $11, and ever since then the stock has been sliding down, and we're just down about 50%. Since IPO, and it really wasn't that long ago. We're just about to go on a month return, which was for the Blue Apron shareholders, will probably diminish a lot of gains, or diminish a lot of their shares, and probably have a lot of mad shareholders, because now Amazon is definitely stepping into their space. They are now starting to affect the share price in the company, because remember, if Amazon is seeing growth and they see that Blue Apron is a small company and they want to step on that growth and they want to go, I would say obtain the opportunity, and they know they can get those customers, they can get a better outreach of customers. That signals one, that's good for shareholders, that's good for share price. That's going to make shareholders want to buy more Amazon stock. Now, that's pretty much why you see Amazon up. A lot of shareholders are, they're really positive. They feel really good about that, because Amazon is steady expanding, trying to find ways to grow. Remember, I said, we want to look into those growth names. If we find growth names, we hold on to them. We don't trade them. So Amazon is definitely showing growth. Now, Apron, just came out, last month on the 30th. And as we see right here, the stock is down 50% thanks to Amazon. I'm not sure how low the stock will go, but we have breached that $10 level. So $5 might be next. And below 5, we might go to penny stock levels. Or, some people might consider this a penny stock level already, but once we reach that $5 level and we go even lower, that's going to be pretty much embarrassing for the stock to open up at 11 and go all the way down to 5, or go all the way down to 3, or maybe go all the way down to 1. So this company has to do something. They have to come out with some kind of positive news to make shareholders really confident about the stock. But so far shareholders have been selling price, right? Shareholders have been selling stock, making the stock go down. Amazon shareholders have been buying stock, making the stock go up. Now let's check out Facebook. Facebook hit a high of 160, right? And when you see Snapchat still hitting all-time lows, while Facebook hits all-time highs. Are you guys getting the picture here? We want shareholders to be, or as a shareholder, you want your company to, look for growth. Definitely, kick out or kill all the competitors in the way. So that way they were able to obtain a bigger market or maybe take away, some of market share from, new customers that are stepping in. So we see Facebook hitting 159, 160 all-time high. And like I said, we see Snapchat, brand new company, IPO'd at $29. People are saying, okay, it's going to be the next biggest thing. But as you see, Facebook started to integrate. They started to innovate. They started to add the same features as Snapchat on their platforms. And they're, people are like, okay, Facebook is able to do the same thing. So Snapchat probably shouldn't be viewed as, a really good company, to where the share price can go to 30 or, go to 40 or 50. A lot of people are saying that, it does have the same return, compared to each other. They do have the same return as Facebook when it did IPO. But Facebook, after a while, Facebook actually bounced up, after months of falling down. Facebook bounced up, but Snapchat is still falling, and I'm not sure where the bottom is, for right now. But we see right here, now is the time to buy Snap. So some people are buying Snap. Some people have been buying Snap since $17. They've been saying, okay, Snapchat is a good buy at $17. But as you see right here, the stock is still falling. So who really knows what's a good price for this company? As we see, Facebook is definitely taking customers, definitely still showing that Facebook is still here to grow, and Snapchat is, it's just that little kid in the room that, that's unexperienced, while you have, Facebook definitely being a powerhouse here, taking a lot of, I would say it's more about profitability. Snapchat has offered a discount to advertisers to advertise on their platform, because not a lot of people have been clicking on Snapchat's ads. I said this before, when I go on Snapchat, I don't go to watch the ads, and anytime I do see a Snapchat ad, I hurry up and click out of it. So this is how, people view stocks. If you see your company's doing really good, some shareholders get really confident. They feel really proud. They say, okay, let me buy some more shares right here, because we're seeing growth. We see that the company is actually doing what shareholders like, right? If we see a company, brand new company, unexperienced company, some people will have the company stock up. But once people start to price in how much competition, how much market share is being taken away from the other company, that's when we start to see share price start to fall. So let's go over our portfolio once again, and I'll be out of here in a quick second. So we see we're back up. We rebounded. So we see Take-Two Interactive. We're back at $76. Remember, temporary falls. We see Take-Two hit all the way down to $71 again. It was just a temporary fall. We see the triple Qs. We see leverage returns in the NASDAQ. I believe in the NASDAQ. NASDAQ is definitely going to go higher no matter what. And as we see right here, our overall total is about 13,000 for the triple Q. We got about 1,500. That's pretty, that's a pretty good, decent return. We see Honeywell, $1,000. We see Apple, $1,600. I don't know if you guys go back my last video, I bought Apple, and as we see right now, we're already up $1,600 on Apple. Berkshire Hathaway, we're up $1,300 on it. Chesapeake, we're still down. Clorox, down a little bit. Clorox really hasn't moved that much, or we really don't have that that many shares for us to see an actual difference in the company stock. We see Home Depot trying to recover. Home Depot will hit that $160 high. You guys can bet your bottom dollar on that one. And as we see right here, Honeywell, PLX, remember that is the penny stock that we did have. Starbucks still coming down. I still own this for the dividends. And SPU, remember, it's the penny stock that we were going to hold. But we see all the positions that I do hold, they're doing really good. And a lot of people are confused, why did I buy these companies? Because remember, when you see growth, when you see, a really good stock chart, or when you see, really good patterns, or when you read, the financial statements, or when you read, news on your company, you want to make sure that your company is steady trying to expand and explore and find growth. Remember, Facebook is hitting all-time high because, remember, they're killing Snapchat. Amazon is, 10 hours away from hitting their all-time high. Why? Because they're going into the realm of, where Blue Apron is, right? Blue Apron, new IPO, and we already see the implications of Amazon. We see the company stock prices at 50%, down 50% just about. So remember, growth always attracts investors, and you can pretty much see that, with the with looking at the stock chart, pretty much. And that's pretty much all, that's all I have for you guys. But remember, if you have any, if you want me to comment or if you want me to show any stock chart, if you guys are confused about any stock that you guys want me to check out, definitely let me know so I can go through that with you guys. But remember, I bought Apple just in my last video. Now we're up $1,700 on it. That's that's a pretty good return so far. And you really have to watch out for this growth. Remember, I said Apple is going to start going up. Remember, Apple does go on those cycles, with the phone. Depending on which phone cycle it's in, the stock chart will relate that stock cycle. So remember, you have to pay attention to the charts, and you also have to pay attention to the product cycles. So that way they'll let you know, if it's a buy on, this product cycle, or do you have to wait the next product cycle, or do you have to wait for Apple to bottom out? Apple definitely had to bottom out, because we see Apple right here, had to bottom out 156. After that 156, stock chart wasn't really doing it. It wasn't really showing nothing. Amazon was just about, going up and down, zigzagging just about, and we see it hit that huge low of about, just about 140. 140 was definitely the time for people to start buying, because we know all those people that were buying Amazon, all those people that were buying Apple flushed all the way out, and they took their gains, and now we have time for new investors, and that was your time to get in at that 140 or that 140 level. And as we see, Apple is still climbing up, and now we're ready to climb up and ascend past 160. And that's pretty much, how I look at stock charts. Remember, we see momentum definitely showing up, or it's kind of curved here. We have buying momentum still pointing up. So remember that 150 is still going to be that challenge that we have to break above. But, after we get 150, 180 is definitely the next stock price for this. We see it. I already have it marked down right there. Take two solutions. This is a stock I still do hold. Earnings is definitely coming up. Earnings season is definitely coming up. So if you guys have a stock that you guys want to check out before earnings season, make sure you guys are reading, reading the quarter before. Make sure you understand what investors are already expecting. So if you buy a stock and the next thing you know, they report a really good quarter, optimistic outlook for the year, but you see the stock price down. So we want to make sure that we backtrack, go back in the company's histories, so that way we understand that what investors are looking for will make the stock price jump up. So if the company is looking for, high growth, and what the company reported was moderate growth with a moderate outlook, but to you, since you're a new investor, you think that, that's a really good call. But if you go back to the last call, they say that, they're looking for really good growth, and, they report with this and the stock price goes down, you might lose a lot of money. So what we want to do, we want to go back to the history of the conference call, so that way we'll understand if the company stock price is a buy, or if the company share price is a buy, or if it's a wait and hold and see. So Honeywell is definitely, one that's definitely going to get, really good profits from some of Trump's policies, but we have to wait until those policies go into full effect before you start to see me, start to buy up the stock. But I really should be buying the stock right now. But with that Trump policy, or if that Trump policy gets rejected, this stock is definitely on the urge to fall, or to take a small dip. But remember, we see it, have trouble at that 135 level. Now we're breaking past that 135 level, and now 135 was just about support now. So we're no longer overbought at 135. We're leaning towards that overbought level, but now we still have room to go to 140 and 150. And before you know it, next year the stock price might be at $200 at this time of the year. So remember, we want to seek growth. If we're able to seek growth, and we're able to look for the companies that are being well managed, not those companies that are showing up and down quarters, showing shareholders are definitely leaving out, or shareholders are still calling for a company to move in different directions. We want to make sure the companies that moving on all cylinders, showing growth, showing that it's looking for different opportunities. It might be looking to buy other businesses. Remember, Take-Two Interactive. I don't know why I said Take-Two Solutions, but Take-Two Interactive. They are able to buy a space program, or whatever program. They want to diversify. So if a company's looking to diversify, that's another plus. But we want to make sure that they're diversifying in the right way. And one way to do it is to make sure that you're reading and researching, and making sure that that fits with the company's profile. If the company's definitely moving in a different direction, and you're not, really good with that, now's your time to exit out of the company. But if you feel pretty good about the way the CEO is managing the company, we want to make sure that we're buying that stock. We want to make sure that we're keeping up with that news. If you guys are not aware of what your company's doing, every day, we can always assign those alerts to our phone. Go to Yahoo Finance, and I'm pretty sure you can, follow a stock, or press the star for the star should be at the right hand corner of the at the screen. But I've been doing this a while, so you want to make sure that you're following each company. You might want to set alert for different stock news. I know TD Ameritrade, Scottrade does it. They might send you an alert via email. They might send you through text. So we want to make sure that we're aware of all everything that our company's doing, and also the different reports and the different news that does come out of the company. So that's all I have for you guys. Take care. Remember, if you have any questions for me, comment at the below, at the bottom of the video. Say, okay, I don't understand what you mean by growth, or I don't understand why you say this stock is a buy but this stock isn't. Definitely be try to be specific with your question, so that way I can answer it to the fullest. So that's all I have for you guys. Take care.